This is the Forex chart updated 6:45 p.m. Philippine Standard Time. Euro to USD has an exchange rate of 1.13 with a change in price or appreciated 0.00691 and a change in percent of 0.62. Next, GBP to USD has an exchange rate of 1.33, depreciated 0.00037, and a change in percent of negative 0.03%. Next, Australian dollars to USD has an exchange rate of 0.71 and depreciated 0.0049 and a change in percent of 0.68 or negative 0.68%. Next, BTC to USD has an exchange rate of $54,570, has a change of 4,420 or depreciated 4,420 or a change in percent of negative 7.49%. Next, NZD to USD has an exchange rate of 0.68 and depreciated with a value of 0.00409 and a change in percent of 0.60% or negative 0.60%. Next, USD to Japan yen has an exchange rate of 114.05, depreciated 1.08 with a percentage change of negative 0.94%. Next, USD to Chinese yuan has an exchange rate of 6.39, appreciated 0.00601, and change in percent of 0.09. Next, USD to CHF has a rate of 0.92 or 0.92570, depreciated with a value of 0.01009 and a change in percent of negative 1.08%. Next, USD to CAD has an exchange rate of 1.28, appreciated 0.01104, and in percent is 0.87%. Next, USD to Mexican peso has a price of 21.88, appreciated 0.3157 or 1.46% in percentage change. And this is the price of gold in US dollars, updated 9:46 p.m. Philippine time. Per ounce, it's $1,804.99. Per gram, it's $52.03. Per kilo, it's 58 and $58.29.12 with 0.72% increase. And this is the world news in terms of economy or the market news in different countries. In USA, dollar eases as treasury yields tumble. The dollar index edged down to 96.4 on Friday, easing from 16-month lows early in the week and tracking a global fall in treasury yields after a new coronavirus strain was identified in South Africa, raising concerns of further lockdowns and restrictions that could weigh on the economic recovery. The US dollar rallied against commodities and risk-sensitive currencies including the New Zealand and Australian dollars, Mexican peso, and Russian ruble, while it declined against the Japanese yen and the Swiss franc. Still, The greenback is on track to end the week in the green as investors continue to bet the Fed will have to tighten monetary policy faster than initially anticipated as inflation remains elevated and the US economic recovery remains more robust than others in Europe or Japan. In Japan, the Japanese yen jumped 1% past 114.5 per US dollar on Friday as investors sought safe haven assets after getting spooked by news of a new COVID-19 variant detected in South Africa that may be able to evade immune responses and counter vaccine effects. The UK quickly introduced travel restrictions on the African nation and five neighboring countries, with the WHO set to meet Friday to discuss its implications for vaccines and treatments. Still, the Japanese currency remained close to five-year lows amid widening policy divergence between Japan and the US, with the Federal Reserve signaling a hawkish pivot, while the Bank of Japan repeatedly stated its commitment to retain easy monetary policies to achieve its 2% price stability target. In Mexico, the Mexican peso tumbled almost 2% to 21.9 per US dollar on Friday, a level not seen since early October 2020 as investors move away from more risk-sensitive currencies after a new coronavirus strain was discovered in South Africa, raising concerns of further global lockdowns and restrictions that would weigh on the economic recovery. The peso has been weakening since the beginning of the month amid a stronger dollar, elevated inflationary pressure, and lower than expected activity economic data, along with investors questioning the central bank independence. The candidature of former Finance Minister Arturo Herrera for the central bank governor was withdrawn and replaced by Deputy Finance Minister Victoria Rodriguez, which is little known and has no prior experience in monetary policy. In United Kingdom, UK car production falls for fourth month. Car production in the UK fell 41.4% year on year to 64,729 in October of 2021, the fourth straight month of decline and the weakest October since 1956 as firms grappled with a global shortage of semiconductors which led to production stoppages. The weak output totals compared to last year are exacerbated by the closure of a UK car plant at the end of July, a deficit that will impact figures for a year. More positively, production of the latest battery electric BEV, plug-in hybrid PHEV, and the hybrid HEV vehicles comprise 30.9% of all cars made in October. BEV manufacturing rose 17.5% to 8,454 units, meaning that so far this year, UK car makers have produced more than 50,000 zero-emission vehicles, exceeding the total built in the whole of the pre-pandemic 2019. In Euro area, Euro gains on Friday. The euro bounced back above $1.125 at the end of November, helped by a weaker US dollar and falling bond yields as investors fear that a new and possibly vaccine-resistant coronavirus variant could hurt the ongoing economic recovery. Still, the bloc's currency remained close to its weakest level since July 2020 amid concerns over potential new COVID restrictions across Europe and as investors see the US Federal Reserve tightening monetary policy faster than the other major central banks. The minutes of the ECB and Fed policy meetings showed officials in Europe agreed a very generous monetary policy to support to the economy would need to be reassessed at some point in the future and reiterated once again that the uptick in inflation was seen as temporary, while the US Federal Reserve signaled it was ready to raise interest rates if inflation continued to run high. In Russia, Russian ruble slumps to six-month low. The Russian ruble depreciated toward 76 per USD, the lowest since April, dragged down by mounting geopolitical concerns, lower oil prices, and global risk aversion due to a new COVID-19 variant discovered in South Africa. The ruble tumbled more than 9% since its 16-month high of 69.3 touched on October 26 on Western concerns over possible Russian military intervention in Ukraine. Russian troop movements near the Ukrainian border have spurred fears of a possible attack, but Moscow has dismissed such suggestions as inflammatory and complained about increasing activity in the region by the NATO military alliance. Meanwhile, Brent crude oil, a global benchmark for Russia's main export, fell to 8-week low below $79 a barrel on concerns of rising surplus in the first quarter. On the monetary policy front, Russia's central bank lifted borrowing costs by 250 BPs this year in the face of soaring prices, and is widely expected to raise rates again at its next board meeting on December 17th. In Switzerland, Swiss franc rises from 7-month low. The Swiss franc rose to 0.926 per USD from the 7-month low of 0.937 per US dollar touched on November 24th, supported by a weaker dollar and lower bond yields amid the discovery of the new COVID variant. Investors relied on the firmness of the Swiss franc against the liquidity and high volatility, as shortened trading hours in the United States may unwind short bond positions. Demand for the franc also increased because investors anticipate the new variant may slow economic recovery due to its high potential transmissibility, while the vaccine's effects are still unknown. Meanwhile, the Swiss franc continued to gain against the euro, surpassing 6-year highs, as investors see the currency as a safe haven investment amid market uncertainties from the continued pandemic struggles and inflationary pressure in the euro area. In China, China's stocks fall on virus concerns, new energy gains. The Shanghai Composite Index fell 0.56% to close at 3,564, while the Shenzhen Component Index shed 0.34% to 14,777 on Friday, as investors turned cautious amid concerns over a new and possibly vaccine-resistant COVID-19 variant detected in South Africa, as well as an uptick of local cases in eastern China. Markets were also unnerved by rising tensions after U.S. government blacklisted Chinese firms on allegations of helping the Chinese military's quantum computing efforts, while Chinese regulators asked Didi to delist from the New York Stock Exchange on data security fears. Tourism, consumer staples, real estate, energy, and semiconductor firms led the market's declines. Meanwhile, Chinese new energy firms mostly advanced as the shift towards clean energy gained momentum. In Hong Kong, fears over new COVID-19 variant hit Asian markets' oil prices. Hong Kong and China, Asian markets and oil prices sank while safe havens rallied on Friday over fears of a new COVID-19 variant that scientists warn could be more infectious than Delta and even be more resistant to vaccines, dealing a blow to the global recovery. The B.1.1.529 strain has been blamed for a surge in fresh cases in South Africa and has already been cropped up in Hong Kong, with the World Health Organization due to hold a meeting later in the day to decide if it should be designated a variant of interest or of concern. In the Philippines, PSP measures prompt banks to resume lending, says Jokna. Bank lending has begun to pick up thanks in part to policies adopted by the central bank to limit the number of defaults due to to the coronavirus pandemic and preserve the integrity of the financial system. Thus said Bangko Sentral ng Pilipinas, Governor Benjamin Jokno, adding that the agency provided additional relief measures on restructured loans and the impact of loan provisioning on bank capital to motivate institutions to grant new loans and extended financial relief to borrowers.